Hello everyone, welcome back to yet another video on income tax. And today we will discuss one of the significant amendments came as a part of February 2020 annual budget. That is none other than new registration procedure for charitable or religious trust. So let's check it out. These new guidelines for registering charitable or religious trust is applicable from 1st October 2020 onwards. Earlier, the date was 1st June 2020. Due to this COVID pandemic, they have postponed the date to 1st October 2020. And for students who are pursuing CA/CMA final examination, these new provisions will be applicable from May 2021 examination onwards. So before getting into detail, let's see which all are the important insertions. Starting with, there is a new section under 12AB for registration of trust. And there are amendments under section 80G, 12A and section 11, subsection 7. And 12AA, the existing registration provisions are not applicable from 1st October 2020 onwards. So let's get into detail. As per the new registration rules under section 12AB, the maximum period of registration for a trust is for 5 years. Earlier, there was no expiry for this registration, right? Once you have registered, it will be applicable for a period, unless otherwise it is getting cancelled by the principal commissioner or commissioner. But now onwards, every 5 years, a trust or a charitable institution have to get themselves registered. That means for single registration, maximum period of validity is for 5 years. That's what 12AB states about. And there is one more thing. They have introduced the new registration concept. It is called provisional registration. That simply means once a trust or an institution haven't commenced their activities, they have formed but they haven't commenced their activities, then they can apply for a provisional registration, and the maximum period of validity for this provisional registration is for 3 years. And let's see which all or what all are the time limits for applying for this registration under 12A. And one more thing, this you have to submit your application to the principal commissioner or commissioner of income tax for registering yourself. So let's start. If the applicant is a trust or institution who are already registered under existing provisions, that means you have already registered under 12AA existing provisions, then what you have to do, from 1st October 2020 onwards, within a period of 3 months, you have to apply for your registration under 12AB, and this time limit is specified under section 12A. Moving forward, if you are an applicant, that means once you have registered under this new regime, that means 12AB new regime, and as I've told you earlier, maximum period of registration is for 5 years, right? So expiry of this 5 years, you have to submit a re-registration application, right? For the time limit is at least 6 months prior to the expiry of said period. It simply means, say for example, say in previous year 2025-26, your registration is getting expired. For example, 2025-26, your registration is getting expired. Then what you have to do? At least 6 months prior to the expiry of the said period. That means on 31st March 2026 is the expiry of your registration. From this date, at least 6 months prior, you have to give your application for re-registration. That's what section 12AB states about. And if you are a trust or institution applying for provisional registration, then what you have to do, you must submit your application at least 1 month prior to the commencement of the previous year. It simply means, say for example, from previous year 2021-22, I have plans to get a provisional registration. Then what I have to do? I have to apply at least before 1 month prior to this 21-22 previous year. That's what the Act says. Again, moving forward, if you are a trust or institution who are already provisionally registered and you want to convert your registration to a normal registration, then what you have to do? You must submit your application, and the time limit they are saying at least 6 months prior to the expiry of the period of the provisional registration, or within 6 months from the commencement of its activities, whichever is earlier. You're getting confused, right? It is simple. For example, I've already provisionally registered, okay, and my activities have commenced. Then what I have to do? Once my activities have commenced, I have to apply for a normal registration within 6 months of commencement of activities. Or for say, after 3 years, your activities haven't commenced. Then what you have to do? You must submit your application at least 6 months prior to the expiry of the period of provisional registration. That means before expiry of your provisional registration, 6 months prior, you have to submit your application for your normal registration procedure. This is what the Act says. Moving forward, if you have made any modifications on your objects, that means once you have registered with certain objects and you have made a modification, you have done some modification on your objects, then you have to apply for registration again. For that, you have to submit your application within a period of 30 days from the date of said modification. This is what the Act says. So let's move forward. And the next is, if you are an applicant, say for example, your registration has become inoperative due to certain circumstances which is mentioned under first proviso to section 11 subsection 7, okay, and you want to make it operative again. For that, you must submit your application at least 6 months prior to the commencement of the assessment year from which the said registration is sought to be inoperative. Now a confusion starts. What exactly is this inoperation, operation and all? For that, you have to know what exactly is first proviso to section 11 subsection 7. So let's check it out. Say you are a registered trust and enjoys exemption under section 11. That means once you have registered, then you can take the benefit of section 11, exemption under section 11. So once you have taken section 11's exemption, then you cannot claim exemptions under section 10 except certain items. That means except the first one is exemption for agricultural income, and under section 1023C exemption for specified hospitals and educational institutions, and under section 1046 exemption for board or trust established by government under any act, or government or under any act. So except these three exemption, you cannot take any other exemptions mentioned under section 10. This is what first proviso to section 11 subsection 7 states about. That means you can take out the benefit of section 11, you can enjoy the exemptions under section 11. Once you have started enjoying these exemptions, then you cannot take any other exemption under section 10 except these three. That's what the Act says. And there is one more clause. The Act says if a registered trust opt for the benefit under 1023 or 1046, that means once you have registered under 12AA and you are or you want to take the benefit of 1023C or 1046, then what will happen? Your registration under 12AB will become inoperative. That's what they are saying. And subsequently, if you want to make it operative, then it is possible. But what will happen? The exemptions under section 1023C or 1046 will be withdrawn forever. It simply means, for example, say you are a registered trust under 12AB and say in the year 2020-21, say you in 2021-22, you want to take the benefit of either section 1023C or section 1046. Then it is open for you to take these two benefits. But what will happen in 2021-22, your registration under 12AB will become inoperative. That's what the Act says. And subsequently, say for example in 2022-23, if you want to take the benefit of 12AB, if you want to apply the section 11, that means the benefit of 12AB, then what you have to do? You have to opt for a registration under 12AB again. But what will happen once you came back to 12AB, subsequently you are not allowed to opt for 1023C or section 1046. It will be withdrawn forever. That's what the act says. So once your registration become inoperative and you want to make it operative again, for that you must submit your application. And the time limit for submitting the application, that's what we have seen in the previous slide. It says at least 6 months prior to the commencement of the assessment year from which the said registration is sought to be operative. Say, for example, in our example we said the year which we want to come back to 12AB was 22-23 previous year. Okay, so the assessment year will be 23-24. So what the act says, before 6 months to 23-24, you have to give your application for what? For making it operative again. Hope you got my point. So moving forward, now let's understand what exactly are the procedure for registration under 12AB. There are certain conditions under 12AB for registration. It says if you are an applicant, that means you are a trust or institution already registered under existing provisions. You have already registered under existing provisions. Then once you've submitted your application as per the time limit, which we have already discussed, then what will happen? Once you've submitted your application to the principal commissioner or commissioner, then within 3 months from the end of the month in which you have submitted your application, he will either reject or approve your application. And once approved, your validity period will be for maximum 5 years. And moving forward, if you are an applicant, that means a trust or institution which is registered under 12AB and your 5 years is already over. That means on expiry of 5 years, as I've told you earlier, we have to give an application again for re-registering. Okay, then the time limit is 6 months from the end of the month in which the application was received. The principal commissioner or chief commissioner either will approve or reject your application submitted. And again, if you want to convert your provisional registration into a normal registration, or if you want to make your registration operative again, which you have discussed earlier, or in the case of modification of objects, the time limit for the principal commissioner or commissioner to approve or reject is 6 months from the end of the month in which the application was received. And once approved, again the period of validity is for maximum 5 years. Moving forward, if you are an applicant which seeking for a provisional registration, then the time limit for approval or rejection for the principal commissioner or commissioner shall be 1 month from the end of the month in which the application is received. That means the time limit for them is 1 month. They have to take an action, either reject or approve your application. And again, once you are provisionally registered, the maximum period of validity for that registration is for 3 years. And now let's understand what all are the changes under section 80G. These are applicable only to a charitable trust, not to a religious trust. So let's understand. Suppose a donor has given a donation to a charitable trust. Okay, then the charitable trust must submit a statement in respect of donation received to the income tax department. Along with that, this charitable trust must give a certificate to the donor specifying the amount of donations received. That simply means, say, for example, I'm a donor and I've given a contribution or a donation to a charitable trust. Okay, at the time of donation, the charitable trust is supposed to give back a certificate to me specifying the amount of donations which I've provided. Along with that, the charitable trust must submit a statement to the department stating all the donations received in a particular year. So the purpose is for the department, they can match it. It is for the one-to-one matching. Why? Because once the donor, while filing his return of income, he will definitely take deduction under 80G. So while taking the deduction under 80G, he will provide the details in the certificate provided by the charitable trust. So that it is easy for the department to trace each and every donations in a one-to-one basis. Okay, so moving further, there are certain other changes as well. A charitable trust have to apply for registration under 80G separately. Even if you are a registered trust under 12AB, you must submit your registration application separately under 80G as well. And again, the period of maximum registration or the validity of 80G registration is also for 5 years as per the new rules. Now the question arises, what if a charitable trust is not registered under 80G? This 80G registration is for the benefit of the donor. Say for example, I've given a donation to a charitable trust and the charitable trust is not registered under 80G, then a donor, for me, I cannot take the deduction under 80G. I can take deduction under 80G only if the recipient charitable trust is registered under 80G. That's what the Act says about. That's all for today. Thank you for watching my video and see you on next Sunday with yet another new topic on income tax. Take care and bye-bye.